Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for March 10th, 2019. Let's take a quick look at how the markets finished off last Friday. We did see stocks closing lower for the fifth straight session. Actually, it was their worst week of 2019. This after a horrible jobs report. Jobs report coming in with 20,000 new jobs when the street was expecting 180,000. That was a bit of a shocker. On Friday, the Dow finishing lower by 22 points, while the S&P 500 finished lower by 5.5 points. The Nasdaq was down 13 points, and the Russell 2000 finished lower by just less than 2 points. Now, all of these were well off their lows of the day. A strong rally into the end of the day. The bond market also rallied. That took the yield on the 10-year note down a notch again. It is now at 2.635%. Crude oil also closing well off its lows of the day, but still closing lower by 62 cents or a little over 1%, while gold managing to bounce 12.5 points. Real strong reversal there. That had a lot to do with weakness in the US dollar. Now, as I mentioned, the jobs report was just horrible, but what does that really mean going forward? Well, certainly if the next report shows a similar pattern, then, those concerns about slowing global growth continue and actually accelerate. But there's one other thing to look at here, and I'm going to switch my layout on my chart and go to the monthly time frame. Let's take a longer term view. And if we look at the monthly chart of the Dow here, have a look at the divergence that we're seeing right now. Here's on the RSI. You can see lower highs, that rollover, while here it's pretty much sideways. So there's a lot of divergence there. That's pretty significant. If we look at the S&P 500, the pattern is very much the same, and you'll see the same pattern on the Nasdaq as well. So, even more so on the Nasdaq, actually. So if we really look at this closely, there's some warning signs here. There's some major warning signs. That doesn't confirm that the drop is underway yet, or that we're going to see a big correction, but it's certainly giving us a big hint in that direction. So it's telling us that we need to keep a very close eye on things going forward. Now, one of the things you can do in a situation like this is take some of the bigger names. Let's look at those FANG stocks like Facebook, Apple, Amazon, Netflix, Google, those big tech names. Have a look at those or keep an eye on those for a potential turnaround, because those can drag the whole markets with it. So in today's pro video, I'm actually going to analyze each and every one of those charts. So I'll see you over there, but that's about it for now. Enjoy the rest of your day, and we'll see you on our next update.